Joining me is Jonathan Corpina to talk the curiosity that is happening in this market. Jonathan, you said yourself that you're a little confused why we're up today. Why is that?
Clearly I thought coming into today would have been a great opportunity to take some risk off the table. We had a nice run up in our markets yesterday, hitting all-time highs. So usually we see a little bit of a pullback. Futures did indicate that this morning, but quickly after the opening, we rebounded from there. I think right now investors are looking at, what's directly in front of them, and that's two things. One is we continue to get through earnings season, and the second is the Fed. We're going to have some announcements coming out tomorrow, which the market is already pricing in a quarter point decrease in interest rates. So I think that right now, as we get closer to that, everyone's feeling a little bit more comfortable that that's the direction that the Fed's going to go. So right now, the market seems to have stabilized, which I think is a very positive sign.
Yes, the Fed cutting rates does make for a nice trampoline, I guess you could say, for markets. Should something happen, we have that bounce back. Jonathan, yesterday on Twitter, you said you wanted to talk the VIX, which is pretty low. We're at 13 right now. What are you noticing in that?
Kind of interesting. I go back to what we saw yesterday with the market, S&P getting to all-time high. We would have thought we would have seen the VIX come down a little further, and we didn't. The VIX was up almost about 2% yesterday, which is kind of odd. If you watch a long-term chart of the VIX over the last year or so, anytime it breaks down towards that 12.5 level, it seems to bounce right back up immediately. We saw that last week. We're seeing that now. And even today, the VIX is up ever so slightly right now, should have a little bit of a sell-off here. So as it maintains above this $13 level, I think you should watch that level. If it breaks there, it might be a good buying opportunity.
Why do you think that's happening? Why do you think it's not going down so low?
So because there's still that, all the major headlines that have been in front of us for the last 3, 6, 9 months are still here, right? We're still talking about tariffs. We're still talking about Brexit. We've got the 2020 election coming up. All these different factors that are out there are big headwinds that just have not been able to hold our market back just yet. So in time, I think those headlines will have the strength to stop our market, not just yet. So that's why I think the VIX right now is pricing in a negative headline coming out in the short term.
Here's something really interesting, and I know that while we are exchanging comments on Twitter, one of our viewers noticed it as well, that there's this block of 50,000 April $65 calls. They were bought for 10 cents. Now, if that were to happen, that would be a 500% increase from where we're seeing the VIX now.
Yeah, that's a pretty significant bet. And what you do see in the option world is kind of leaves footprints as to what might happen in the equity space there. But clearly at that price and at that discount, I think someone's not spending a ton of money, but they're spending a good amount of money on a bet for the future there. So that should be something we should watch.
It sure is a big bet. Now, Jonathan, we are finishing up the anniversary of the famous Black Tuesday. What kind of advice would you say investors should take from that or learned after that incident happened?
Were you even born yet when that occurred?
Jonathan, it's the Botox. It works wonders in the 20th century.
So look, I think historically we certainly look at that and we watch things that have happened in the past, but the world that we live in now, the economy that we live in now, the markets that we live in now, kind of hard to translate to what's happened in the past. And when you talk about the past, we don't even have to go back there. We kind of draw comparisons to the financial crisis, 2008, 2009. I think we're in a whole new era since then. But clearly it's something that we watch and historically look back on and really take in awe the significant movements that we saw in the markets during those times. And you think about now how we're able to, with technology, trade so much volume and be in so many different stocks at one time. It's amazing to wonder what that day was like back then. You might want to grab some of the older guys down here to see what that day was like.
All right, well, it's definitely not you, Jonathan. We're looking pretty good today here on a Tuesday. Thank you so much. That's Jonathan Corpina from Meridian Equity Partners.